assets really increasing? Is real estate prices going up, or is our money just being devalued? The 100,000 that you have in the bank today, or the 50,000, or the 10,000, or whatever the number is, the million, if it's sitting in the bank, you are losing buying power. Or are our assets really increasing? Is real estate prices going up, or is our money just being devalued? And the truth of it is that the fiat currency in general, on a global fiat currency level, but let's just talk about Canada. Ultimately, our dollars are getting valued less and less. Our buying power is less and less. And the 100,000 that you have in the bank today, or the 50,000, or the 10,000, or whatever the number is, the million, if it's sitting in the bank, you are losing buying power. In this economy, by the way, you are losing it quickly.
The money in your account, it didn't do too well, it's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
And if you think that inflation was a problem before, wait till you see what we're going to head into over the next 2, 3, 5 years, by the way. And yes, there will be some deflationary components, 100%. It has to, because of technology. But there are going to be things that just go up. And that's going to be because of supply constraints. It's going to be because of what's happening with oil. There's going to be a lot of reasons we're going to see inflation. And it's why we're seeing bond yields tick up. There's a lot of nuances in the bond yield, but we're seeing that bond yields are over 3% again, JG. I mean, it's very volatile. When you look at the fact that 50 basis points, and I want to go back to this interest rate, the 50 basis point, what people aren't saying, which is what it was an emergency cut. Bank of Canada is seeing where this economy is going, and they're going, holy crap, we need to react. 50 basis points. So I shared that slide with you.
This has happened 4 times, right? This has only happened 4 times, I think, in the last, 25 years or so?
Yeah. And guess, if you look at this particular chart, every time it's happened, what's happened? Recession. So don't think for a minute that we're going to get away without some degree of recession. I'm trying to remain optimistic as I'm looking at the data, but it's just really hard to be optimistic. And particularly, JG, for those who own assets, it is going to be the great divide. The money transfer, the wealth transfer, the rich will get richer, or even the wealthy will get wealthier. Sadly, those in the challenging service sector, for example, construction, for example, is going to be another one that gets hit. You're going to see a certain demographic in that kind of middle and lower middle, and then below that, they're going to be challenged. We've talked about it before. If you're in that upper middle and beyond that, you're probably going to be bitchy because you're paying more, but it's not going to really affect your lifestyle too much.
Patrick, you're like Captain Bitchy. I mean, you represent that whole cohort right there. You're you're the captain of that crew.
I am the captain of bitchy. It pisses me off. I can't help it.
Hold on. Let me talk about this, Patrick, because you just said something fascinating here, which I want to touch on, because there's people listening to this thinking, well, I'm not in the house. I haven't bought real estate yet, or I don't have as much real estate as I'd like, or whatever story people are telling themselves. But do know that if you're watching this, and if you understand the narrative we're talking about, and if you want to have hard assets, Patrick, it's easier to get hard assets today than it's ever been before. Look at what you can do with REITs, real estate investment trusts. You can buy. You and I know personally.
Go to a private REIT. Private REIT.
Private REITs. You and I both know plenty of private REITs that do exceptionally well, and you don't need to have hundreds of thousands of dollars to join these REITs. So that's one option, right? Look at our friends, right? Steven and our friends there, where you can invest for $1 in hard assets. You can start with as little as $1, and there's plenty of other private REITs where you can get in for 1,000 or 5,000 or whatever the case may be. My point is, if you believe in this narrative Patrick is talking about, you can do this without having to buy an actual house or a secondary suite, or the way that I particularly do real estate. There are tons of options for people out there. They just have to be willing and wanting to go get it, Patrick.
100%. And so if you're really looking at this and going, well, I've got money in the bank, I don't want to spend it, got it. You need to allocate some capital to stores of value. So JG, when we look at what's happening economically, a 50 basis point cut is an emergency cut. If they do it again in December, it's really shining a light on what they think is happening economically. But we can't, and that's just within Canada. Now, we also have to consider that when we look at a global macro, Gold is at record highs. Silver is about to launch into another stratosphere. So gold, I think, is up 70% or some ridiculous number. I mean, a couple of years ago, it was $1,700 an ounce US. Today, it's $2,700 or $2,800 an ounce US. That is where people go for safety because it rides, it holds a store of value that you can exchange that money for dollars in current value. So here's the thing, money in the bank is just losing value every single day. There's big concerns for even a hyperinflation kind of environment, which is just, it's about not just about the amount, but it's the speed. We'll start to see, we risk the speed of inflation gaining, and you need to get your money tied into these stores of value. And whether it's, and we're seeing gold, silver, we're seeing Bitcoin, depending on where you're looking at real estate. I mean, these are all hard assets and they're inflating because that's what's happening with the devaluation of the dollar. Again, we need to get our money to work.
That's 100% accurate, Patrick, in that last statement there, which is people have got to take their financial futures into their own hands. That's the overall message that I'd like to leave people with. And there's a million ways nowadays. There's more ways than ever before to do that, to take your financial future into your own hands. It wasn't this easy 20 years ago, 50 years ago, 100 years ago to take your financial future in your own hands. It is possible today, but people have got to do it. Because, Patrick, if they can do one little lap around the YouTube or one lap around Twitter, and they're going to hear an inflation narrative that is 100% legitimate. They're going to hear a deflation narrative, which is 100% legitimate. They're going to hear a stagflation, and now there's dragflation and all this other shit. Everyone's got their views, everyone's got their perspectives, and they're all legitimate. They can all prove it with data and so on and so forth. But the bottom line is that if people take control of their financial future, they won't be at the effect of this stuff because they'll be in control of this stuff.
Yeah, and you brought up a point that we'd made earlier around stagflation and dragflation. We play with words a little bit, but stagflation is ultimately when you're going to start to see unemployment rise and inflation continue to go up. And so you got an economy that's slowing down and the inflation continues to rise. We use the term dragflation because the best case scenario is that everything slows down and stretches out. In other words, there is no growth. We've arguably been in a little bit of dragflation the past couple of years, and it can get quite a lot worse. And there is a strong argument for stagflation. And this is all to say that we really do have to risk mitigate and put our capital to work. We keep putting that kind of on the table, get into stores of value, real estate being one of those stores of value, diversify your portfolio, and you will prosper in the future. But you have to put your money to work. Real estate's a place to.
So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.